Hey, good day, everybody. Dennis Wilburn, the Active Trend Trader. I've got a real treat for you today. I'm going to be showing you a stock and an ETF. The ETF has the potential of returning over 30%, real strong probability of that, by the end of March. I'm going to show you how to determine where it's going and when it might get there prior to the end of the session. And then I will be reviewing one stock that is really getting a really strong setup on the weekly charts, and we want to be ready for it for a potential trigger into the trade off the daily charts. But first, check out the drop down in that corner. It'll show you how to get involved and take a test flight in the AutoPilot Trading Service. So let's go ahead and get into today's session. We'll be looking at the indexes and this stock and ETF right now. So let's take a look at the S&P. What is it doing on the spider? As you can see, on this was on the 24th, 25th, 25th, and then there's the 28th, and then the 1st, and again today. We're getting a really nice push up after last Thursday's reversal candlestick here. That is a piercing line, which is a bullish reversal stick. And we're starting to push up on Friday. It excelled up towards the moving averages. Pay attention, though. We are still, below the 20, below the 100, below the downtrending line, below the 50, and the 34 is in there somewhere. So we're still below some of the major moving averages. What do we have on the weekly chart? Very interesting. While I cannot say that the TSI has actually crossed to the upside, it is remaining, positive in that it's slowed its descent. Same on the market forecast. Same on the MACD. Matter of fact, the MACD has given us an early indication with the histogram basically starting to click up. That means the difference between the two momentum lines is getting closer together on that moving averages. Note, nice, real strong hammer on Friday after a downtrend. Anywhere down into the wick can be considered a level of support. And so far this week, we've tested a little bit into the wick. And we'll see what transpires from here. Prices are hitting their heads, though, against the moving averages. Would not surprise me to see us move all the way up into the downtrend line, which is going to correspond to approximately the 200-day moving average. Price actions on the S&P are below the 200-day moving average. The Nasdaq. Nasdaq actually breached and pushed on up after the reversal. This is the rally attempt here. The rally tip is still underway, and I think it's like 4 to 7 days after the rally attempt is when you expect to see a follow-through day. That's normally what it happens. Hasn't totally happened yet. Stopped right at the downtrend line, which was actually drawn in when it made this high and then corresponding with this high. And so that downtrend line has been there for a while. Whenever I see a dynamic line of both the downtrend line and the dynamic resistance or support of the moving average, when they when they intersect like that, that is often makes for a strong level of either support or resistance. In this case, it would be resistance. We have a similar story, though, on the weekly chart. Huge hammer on Friday, and then all of the momentum indicators are in the area of the chart where they could potentially turn around. Now, it doesn't mean that we're not going to have a retest back into the wick of the hammer, but it appears as if we may be doing something constructive for a future move to the upside. Again, Nasdaq is way below its 200-day moving average, below its 50, below its 100, below its 34, and actually below the 20. So that's what's going on with the Russell. IWM looking, I got to say, it's actually looking a little bit better. We had, again, this was a hammer, but not a reversal hammer on the weekly chart, but the interpretation could be fairly similar. We came down, we tested a level of support, and note what has happened for the last week. We actually have a cross up on the TSI, the market forecast. The MACD has not crossed up yet. And so one of the reasons, folks, that I'm giving you all three of these, I know some of the folks who follow us, they do trade the Thinkorswim platform and like the market forecast. I like it. It's very predictive, especially when it's reversing out of the lower reversal zone, when you have 2-line and 3-line clusters. But for those who don't trade that, I've thrown in the MACD. It provides similar information, and when combined with the TSI, can be pretty predictive also of what's transpiring, especially if you're paying attention to when the histogram actually makes its shift. So what do we have over here? Look for price action to continue to push back up, probably back up to this level, about the 208 level. And we may go into, if the market, we still got a lot of headwinds on this market, we may actually go into as it did last year, where it's kind of zigzagged in between levels of support and resistance. We may get something similar here. Let's see if we get back up here. And we want to pay attention. What's it doing up here? So what is it? How do you trade something like that? Well, you be very careful trading in the middle of the zone, because that's kind of like no man's land. That's where you will get, meat grinder area. We want to pay attention to when it starts to get down to the lower levels of the zone here, or the upper levels of the zone. And then I would flip out. If I'm down here at the lower level, I would flip out and look at either trading options back up to the upside, or TNA, the 3-time leveraged ETF. When it gets up to the top side and then reverses down, I would be looking at either trading options to the downside or TZA, which is the leveraged 3-time leveraged inverse ETF of the Russell. So that's what we've got with the Russell. It's looking fairly positive, as you can see. Longer term, its momentum shifted, but you see how just kind of lazily and at a low trajectory it's showing here on the on the MACD. That often says, the buyers are not just rushing right in there to push the price of the Russell up. And so let's see what transpires from here. Again, I would look for it to get into the zone, probably about the 207 or maybe up to the 50-day moving average. If we have any stalling there, I would look for it to, fall from there. So that's that's what we have for the indexes. How about what is the stock we're looking at? Well, I'm looking at your friend of mine, Tesla. You're going, Tesla, what do you mean? Tesla is showing some very positive moves. We had a hammer that finished off last week, and we are actually getting a breakout above that hammer this week. We broke above the downtrend line. Here's Monday, pushed right up to it. Tuesday, got just slightly above it, and today we closed above it. So how do we want to trade Tesla? A couple of different ways we will take into consideration. It is holding above the 200-day moving average. And so I may want to look towards the intraday chart to be able to jump onto Tesla to the upside, but we may get a little bit of testing back towards the, to see if it's going to kiss the trend line goodbye. And so I'll be paying attention right there at the 871 level. The other thing that we can do here to give you an idea of where, let's see, as you can see, well, we measured this to the downside from this high here to this low, back to this high, and it shot down to about the 78% retracement, rebounded, okay? Bullish reversal signal. So I would look at trading it off of the uptrend line about there, That would give us a one trade to the upside. I would look for it to maybe start running out of gas if it gets up here around the 50 or even up to this level here. I'm going to go ahead and remove this Fibonacci here and see what else we can do with regards to this. Last time it moved up, and I think it's already extended this move, and this is oftentimes a signal that we're going back into a bullish scenario, is the last move. Now, let's take this move. We can do a couple of them. Let's take this move here. And we're looking for symmetry of move from there to there to there. Extend it down to the low. And as you can see, the 100% symmetric move with this move here would bring us up to about the 1021 level. So that's one of the areas where we could be looking at price action moving towards. As long as that 50% extension remains intact and we don't get a close back below it, we get a close back below it, look for it to fall back down and retest the towards the low. Another way you can do this is on a shorter period is this last move up here. And I think that's about there. And I think that may have already been hit. And in fact, it was. There was a 100% move. So when you extend the symmetry of the most recent flag up, that's a good sign that we are going to continue to move in that direction. Again, I would look towards, looking to trigger at a level, but look off of the intraday charts on, to actually get a trigger to get into the actual trade. Let's go ahead and jump out of that. And then last but not least, I promise you an entity that has a really good opportunity of going on up and hitting, having a 40% move, and that is FAS. Now, FAS is the 3-time leveraged ETF of the XLF. Okay, this is the ETF for the financials. And as you can see, on the financials, it is in this really nice little horizontal, grab box here. This nice little horizontal box. And it's been moving in that for quite some time. I get it. There we go. And within that box, give us an idea of how far has it gone. Well, from the low here up to here, that is about 11%. Multiply that times 3, and that's what you have for the for FAS, FAS. The other thing to note is that this is kind of a horizontal. This is a horizontal price range. However, when I convert it over to the FAS, you'll see what happens. It tilts. The tilting is due to the contango and backwardation, and that's an issue with what the entities they have to buy and trade in to have this emulate 3 times the daily move of XLF. So I'm going to go ahead and remove that out of there. And now we've got this additional box, but it's remaining still within it. So now I can measure the same thing. And from the low here, back up to this high, well, that's 38%. Now that was from the 20th of the December, and then here again on the 24th, and this has done this about every 30 days, 41%. Well, what happened? On Friday, or on Thursday of last week, we came down and hit the low again. So if we project up, well, about 40% or so, we can estimate that, okay, if it hits that line, that's going to be pretty much a profit target over 30%. As you can see, price action started to turn around, came up and retested, bounced back down, and then rebounded today. Let's get an idea of when we think it might get there and where. So first of all, I just want to throw in a Fibonacci here, and this will be a Fibonacci of, will it have a symmetric move with this move from here to here? I trace that back down to here. And so that 100% would put us up at 147.67. A 78% extension would put us at 138. But what about the time? Well, we have a couple of areas where we can look at time, and one of them is here from this low to this high. How long did it take? Another one is this low to this high back here. But then there's another one. If you look over here on the weekly chart, and we go over there was this move here that went up 1, 2, 3, 4, 5 weeks. This one went up 1, 2, 3 weeks. This one went up 1, 2 weeks. And so to be conservative, I'm going to go ahead and I'm going to grab this price from here, this low here, up to, out, right? Let me re-grab that. There we go. From this low here, up to that high there, back over to that low. Now that gives me a projection of when price actions may get up to that level. And as you can see, there's my upper level. And I'll blow this up on the weekly chart. And that puts that out there the week of 3/28. So I'm looking for a potential test back into the wick of yesterday or halfway down into today's candlestick. If I, as a potential trigger point about 112, if I drop below the low of today's candlestick, I would be getting out of this particular trade. The other thing you can do is just wait and see how far down it does go. But that gives me a projection out the week of 3/28, which is approximately 4 weeks from now. So quite interesting. And where's the upside target? I would say the upside target is somewhere between 138 and 147. And how far is that from the low of last week? Right there is 32%. If we get all the way up to that other one's 41%. So as I said, real strong probability of getting up into those levels for a 30 to, about a 30% gain. So, okay, guys, that's what we have for today. I hope you enjoyed that. Let us know down in the comments whether or not you find this rewarding. And remember, I forgot to say at the very beginning, but be on the lookout up in that corner. There will be a drop down that tells you about how to get involved with AutoPilot trading. So until next time, aloha. God bless everybody. Hey, before we get going,